element of financial statement.
Good morning, afternoon, and evening, depending on the time you're actually listening to this video. Welcome to our second to last class. Welcome to our class 3. And today's topic is what elements of financial statement. So, we have actually done our double entry system. We have extracted our trial balance. We have known how to actually adjust and also extract our trial balance. So for the next stage, or for the next thing for us to understand, is what the elements of financial statements, for you to know where the groups of the items you see in our trial balance fall under. We have our assets, liabilities, income, expenses, and equity. These are the number 5, or the 5 elements of what financial statement. So before I actually go to this part, elements of financial statement refers to the principles guiding every financial statement being represented. Don't be confused though. Elements can also mean features or characteristics of financial statements. The reason I'm actually saying this is because sometimes some lecturers tend to use the word characteristics or what features or elements. So you have to be conversant with different aspects of the names. You can just see an examiner using characteristics, your lecturer may use features, and you may know elements. So you have to know everything. It just means that for every financial statement there must be an integral formation which is called an element. So you have to understand that for every financial statement being represented, there must be elements that make up that what financial statement. The elements of financial statement includes, we have our assets, liabilities, income, expenses, and equity. Now, explanation. Assets, according to a layman definition, simply means what a person owns. Yes, it's true, but the standard definition is that asset refers to what a company gains from outsiders that increases the income and company benefits in a business. Assets can either be fixed or current assets. So before I start explaining the meaning of fixed and current assets, one thing you should know about assets is that assets as an element is what increases the benefits, the company benefits of what a business. Assets can be divided into two. We have our fixed assets and what's our current assets. Let me give you this instance. Let's say I am in a business and I maybe start a business with 50 million naira. That 50 million naira is called what? Capital, because that's what I used to what? Start up the business. For an asset, for example, let's say you have a furniture, or you have cash, or you have building, that is an asset. And an asset can be a long-term or a short-term asset. For example, a long-term asset can be like building or can be land. They last for a longer period of time, and depreciation actually requires a shorter period, unlike cash. Do you understand? For example, short-term assets include cash. Short-term assets includes debtors, bills receivables. Do you understand? In as much as land will be depreciated, but lasts for a very, very, very long period. Like for example, if they build in a school now, it will take like years before maybe that school can be demolished, or before that school can go down. Why? Because it's an asset, and it's a what? Long-term assets. So that's all you should know about assets. For example, I made examples like motor van, vehicles, premises, building, land. While current assets, these are also known as what? Short-term assets. They have shorter duration period, that's within a year. So if for example they are to throw this question and ask you, the assets that last for a longer period are called what? They are called fixed assets, or what? Long-term assets, or non-current assets. While current assets, they last within a year. That's within what? A year. Within a year is like 12 months, right? That's short-term assets or current assets. So the second one is what? Liabilities. Liabilities is simple the opposite of assets. They reduce the income benefits of an organization. Liabilities can include loan, creditors. If, for example, you receive loan from outsiders, is it increasing the benefits or reducing the benefits? It's increasing. It's reducing. Why? Because some somehow or someday you have to just pay out that loan to outsiders. So it's going to reduce the benefits, which is also known as liabilities. And liabilities, like also assets, have long-term and short-term liabilities. Long-term liabilities can include debenture or long-term loan, but short-term liabilities, e.g., we have creditors, we have payables. So liabilities or short-term, they can either be long-term liabilities or short-term short-term. Long-term liabilities include long-term loan, debenture, etc., while current liabilities include creditors, bill payable, accrual, etc., like already stated. So the third one is income or sales revenue. Income refers to the amount that comes into the business, e.g., sales. So for example, you are selling shoes or you are selling provisions. So by the time you sell things to outsiders, that's when you get your income. That's when you get your profits. Do we understand? So income, sales, or revenue, they all mean the same thing. They all mean the same thing, but most of the time, because of the new revaluation of the policy, it's now called revenue or income. Do we understand? But just know all the terms, because sometimes some questions can use sales or revenue or income. But income, what you should just understand that it's anything that, okay, when you sell something, what you get is what is an income. So expenditure, this is what you use in the day-to-day running of an organization. So expenditure can include wages and salary. You have to, every month now, you have to pay your workers, you have to pay your employees. So that's an expenditure. We have rent, we have rates. You have to actually pay some rent, you have to pay some rates, tax. Do you understand? So that falls under expenditure. This is what we use in the day-to-day furnishing and running of the organization. Then equity, like I stated earlier, if I'm to start a business and I invest, like let me say 50 million in the business, that's what your equity. Equity is also known as capital, but most of the times we now use equity, but just still be familiar with all the names, because most of the times they can actually interchange it. So this is what you use in the starting of the business. So here I actually wrote some things that fall on the debit and credit side, so you can actually have an idea of the things that are debited and credited. And all the things that are here, they actually fall, whether we like it or not, all the debit and credit items in accounting, they fall under the 5 elements of trial balance. And it's very important for us to actually know them. 5 elements of financial statements, and it's very, very important for us to actually know them. Why do we need to know them? Because when you just know that all assets are debited and you see something like wages and salaries, you see if you know that all assets are debited and you see something like fixtures, building, cash, you see something like depreciation, you just know that they will have a debit item or do have a debit account. Why? Because they are all debited. If you see something like, or hear something, or even know that all expenses are debited, and you see something like wages and salaries, rents and rates, you know that they are all debited. So these are just things to know that, okay, debit items are expenses are what, and your assets, your expenses, and your assets and expenses are debited, while your liabilities, your income, and your equity, they are what's credited. So that's just what we need to know. So our sales is credited, purchases is debited, equity is what's credited, discount allowed is debited, depreciation debited, discount received credited, payables credited, receivables debited, rent and rate is debited, return inwards is debited, return outward is what's credited. So this is actually going to be, because this is actually a theory aspect, which is elements of financial statements. So this is actually going to be all for the elements of financial statements. So have a great day and keep your calculators close to you, because our next class is going to be on ledger account, and I'm going to be teaching you how to actually prepare a ledger account, and I'm also going to give you illustrations on how to prepare a ledger account and also extract a trial balance.